Hello everyone, today's lesson is all about adjustments. It's a revision session of the adjustments that was taught in grade 10 accounting. So it's aimed at our grade 11 group, but even if you're in grade 10 and it's the end of your year, you will find some benefit out of these notes. The notes to this session can be downloaded in the link in the description below. All right, so how we're going to go about it is we have a specific activity that you will find in the notes and the adjustments to this activity. I will then do these adjustments on a trial balance. Right. So the first adjustment that we're dealing with is a prepaid expense. So with a prepaid expense, it means that you've already paid for an expense that applies to the next financial year. So we need to remove the expense from the current financial year so that it can be recorded in the next financial year. So every transaction affects two accounts. So the two accounts affected here would be prepaid expense, and that's an asset. And the other account in this case, because it's insurance, would be our expense for insurance. The one account is my nominal account insurance. So if I go to the insurance account, I will now need to decrease. Why am I decreasing? Because this amount includes an amount that applies to the next year. So it's not, according to the matching principle of GARP, it's not correct to leave it in this amount. Right, so I'm going to subtract it from insurance, and then in your balance sheet account section, we will have a prepaid expense, and these four accounts, we always add to them. So all the adjustments always gets added to them. Okay. The next adjustment is our accrued expenses account. What is an accrued expense? It means it's an expense that I was supposed to pay this year, but I haven't paid for it yet. So it means it was supposed to be included, and therefore I need to include it. So I need to add it to the expense account, and the account accrued expense is a liability. So the account for telephone has been received but not yet paid. So when we start with the nominal account section, I will have to add this amount to telephone. And then in my balance sheet accounts section, in my accrued expenses, I will add 1,500 to the accrued expense account. The next transaction. Income received in advance, otherwise known as deferred income. It means that I've already received an income that applies to the next financial year. So it must not be included in this financial year. So I'll have to subtract it from my income account. We always add to the income received in advance, but we subtract from the income account it applies to. Income received in advance is a liability because somebody has already paid me for something, but I haven't given it to them yet. So I owe them, and therefore it becomes a liability account. So the 2,000 Rand, and it is for rent. So in my nominal account section, the rent income must reduce, because this 14,000 includes an amount that was supposed to only be received next year. So I will subtract it from rent income. But then in my income received in advance or deferred income, I will add a 2,000 Rand over there. The next adjustment refers to an accrued income. So an accrued income is when somebody still owes me money for this year, and therefore the accrued income account is an asset. I still need to collect money from somebody else. In this case, it's interest on fixed deposit, and the reason why it's an accrued income in this case is because it is not capitalized. With interest, interest, we have two types of interest. It's either capitalized or not capitalized. If it's capitalized, it means it's added to the fixed deposit or it's added to the loan, and it will not affect these four accounts. But if it's not capitalized, it means I receive it as a separate amount, or if it was a loan, I pay it as a separate amount, and therefore it is then added to the accrued income account. Right, so it's the interest on fixed deposit and my asset accrued income that has to increase. So if I go to my nominal account section, my interest on my fixed deposit, I still need to receive another 500 Rand. So I add the 500 to it. And then in my balance sheet account section, in my accrued income, I add the 500 Rand there as well. So these were the four new accounts, or the four accounts that you always have to add. They won't appear on your trial balance. They also won't appear in the balance sheet by itself. You will have to add it to your trial balance. Now let's look at other type of adjustments that we have dealt with last year. When we receive a bank statement, we do a bank recon at the end of the month and at the end of the financial year, and then we find we haven't entered all these transactions. Now, this is actually a normal transaction. It would happen every month, but if it's included in the adjustments, you would record it like you would have recorded it in any other month. In other words, it would affect bank because it appears on the bank statement, and then the other account it applies to. This can be for income that you receive on the bank statement or payments made on the bank statement. So for every possible transaction that you normally do on a bank recon, you will also see over here, or you could see that. So in this case, they gave us bank charges, interest on overdraft, and an RD check. So these two are both expenses, and that's why this will reduce my bank account. So I will go to my bank account. I will subtract those two amounts from my bank account, but the expense will increase. So the two expenses that I'm dealing with in this case is bank charges. So I now spend more on bank charges, and my interest on overdraft is an account that wasn't there, so I will add it, and for that it would be 300 Rand as well. Then we have an RD check, an unpaid check. The value of the check is 1,400, so that's the amount that will affect my bank account. It was received from a debtor in settlement of his account of 1,600. So that means I gave this debtor a 200 Rand discount. Because this check now bounced, he is not entitled to that discount anymore, so I will add it back to his account, the full amount, and I will cancel his discount. So in my debtors control, I will add back his full debt. Then in my bank account, I will subtract the 1,400, because when he paid me, I recorded it as a deposit. But now the check bounced, therefore I'm not getting this money, so I'm subtracting it, but only the 1,400. And then the difference between the two is the discount that I gave him. I need to cancel the discount, and therefore I need to subtract it from the discount allowed amount. Okay. Then we move on to depreciation. Now, what you need to remember, asset disposal can be asked as part of the depreciation question. So we are moving on to financial statements, and they could give you asset disposal as part of the question. But because we've dealt with that recently, we're just doing a normal depreciation. Remember, depreciation, there's two methods. You either have your cost price method or your carrying value method. So if it's the cost price method, it's the historical cost. So it's the original purchase price of the asset that you're going to use to calculate it. But if it's the carrying value method, you're going to use the book value, and therefore cost minus accumulated depreciation. So in this case, let's do our calculation. We have our equipment. And equipment is at carrying value or book value. So for equipment, our cost amount is 75,000, but we will subtract the accumulated depreciation on equipment, which was 30,500. This is for a full year and it is at 10%. So we times it by 10 over 100 or 10%. And the answer that you will then get for the equipment depreciation is 4450. And if we do the same for vehicles, but now remember, vehicles is at cost. And therefore, when I calculate vehicles, I only use the cost price of 120,000 Rand. I do not subtract the depreciation because this is at cost. Then the rate of depreciation for vehicles was given to me as 20%. So it's 20 over 100 or times 20. And that will give you 24,000. Now, depreciation in itself is an expense. It's not normal. It's only calculated at the end of the year, except if an asset was disposed. So it's highly likely that you will have to add it to your trial balance as well. We will show the two amounts separately, the 24,000 and the 4450. And then it's added to accumulated depreciation. Those two are negative assets, but I add it because my accumulated depreciation is now increasing for this year. So we then increase the 4450. Okay. The next adjustment is our bad debts, and again, it's a normal transaction that you deal with throughout the year, but it could also be thrown in as an adjustment. If it is bad debts that's written off, it affects your debtors control. Your debtors control will reduce. So I will reduce debtors control with a further 300 Rand. And bad debts is an expense. I'm writing off more bad debts, so it increases the bad debts account. The insurance, and then we deal with these as an exception. There's an insurance claim, and it's for maybe stock that was stolen, or there was a fire, or some natural disaster. Now, it's a specific event that took place. And the first thing that you need to remember about this, it does not affect the expense insurance. So this insurance, it doesn't affect the insurance, okay? This insurance is my expense, my monthly contribution. When I make a claim at the insurance company, they then will pay part of the loss that I've suffered. So the only thing it does, it reduces the loss that you are suffering because of this event. So in this case, we're dealing with an event that stock was stolen. The value of the stock is 6,000 Rand. The insurance agreed to pay out 4.5. Now, normally when this happens at the end of the financial year, you haven't received the money from the insurance yet. What you also need to remember, the insurance gives it to you in money. So you will have to go and replace the stock. So your stock will reduce with the full 6,000 Rand. So I'm going to subtract the full 6,000 Rand from the trading stock account. This could have been a vehicle that was stolen. Then the principle would be exactly the same. You would subtract the full amount or the value of that vehicle from the vehicle's account. But we're dealing with stock in this case. So from your trading stock, you will now subtract the 6,000 Rand, the full loss. Now, because the insurance agreed to pay out the 4,500 Rand, this is an accrued income. They promised to pay. They haven't given it to me yet, so it's somebody that owes me money. So in my accrued income account, I will add the amount that they agreed to pay, which is 4,500 Rand. Then the difference is a loss, and this is a new loss to my company. So the 6,000 minus the 4,500 will give me 1,500, and this is an expense, loss due to theft. And if it was a fire, I would have said loss due to fire. It's a specific event that happened, and I'm not recovering that. So that's an expense. The insurance short paid, and that's very possible to happen. All right. The next one we're dealing with is a trading stock deficit. The difference between the two. For the second one, the deficit, I don't know what happened to the stock. You do a stock count and all of a sudden you have less stock than what your trading stock account says you're supposed to have. So it's not because of a specific event, it's because of the difference between the stock count amount and the trading stock account. Now what you need to remember with this, right, so if there was a transaction that happened before, you first have to take that transaction into account. So I had this trading stock theft. So the value of my trading stock now is the 75,000 minus the 6,000, and therefore it's 69,000. That's what my stock is worth now. Then we go and check the stock count amount. The stock count amount says that there's 68,500. So there's stock missing. I'm supposed to have 69,000. So that's why this is a deficit. It is possible for this stock count amount to be more than my trading stock value. If that was the case, I'm dealing with a trading stock surplus, and that would be an income. But now it's less, and therefore I'm dealing with a deficit. Trading stock deficit is an expense. And that expense is only the difference between these two amounts. So it's the 69,000 minus the 68,500, and that is 500 Rand. So my trading stock deficit is 500 Rand. The amount that I complete as my final answer, that must always be my stock count amount. So your answer is the 68,500, so it means I had to subtract 500. Remember, your final answer from trading stock must always be your stock count amount. The deficit is the difference between the two. A very common one, and this then basically summarizes the chapter of salaries and wages we did in grade 10, is when an employee was left out of the salaries journal. So we're given his gross salary, his deductions, and then his net salary. And then we're given the information in terms of the contributions. So a contribution is something that the company pays on top of his salary. So it costs us 7,000 Rand plus the contributions to employ this person. In my nominal accounts or in my income statement, I will work with the gross salary and the contributions because that's the expense. That's what it's going to cost me. So let's start with that part. In your salaries account, you will add an additional 7,000 Rand, which was his gross salary, and I add the contributions. Now they say the contribution was for medical aid and pension fund, and it's a Rand to Rand basis. So it means it's the same amount as the deduction. So I add 450 for the pension contribution, and I add 400 Rand for the medical aid contribution. So what is paid out to the employee? The employee gets paid the net salary. These deductions then gets paid to those institutions. So when I do the second part of this in my balance sheet accounts or in my balance sheet, I owe these people money. I owe the employee this amount, but then I owe SARS and I owe this employee's pension fund, because how it works is I take the amount from his salary, I add my contribution, and then it's, as the employer, it's my responsibility to pay it over to those institutions. So in my liabilities section, it's part of your creditors control note when we are going to do the balance sheet. We have SARS pay as you earn. I will add the pay as you earn deduction to that. It's a liability because I now owe SARS. The creditors for salaries would be his net salary. In other words, after the deductions. Now for pension fund and medical aid, it is both the deduction and the contribution. And for medical aid as well, it's the deduction and the contribution. When I add those two amounts together, this will give me 900, this will give me 800. Now if I add all of this together, it will give me the same amount as his gross salary plus the deductions. Okay, so I still have a debit for every credit. It's just split in a bit of a different way. The last adjustment that we're dealing with is consumable stores on hand. It's very often given to us as part of the trading stock. So we count our stock, which is our trading stock, and then we count any other consumable stores that I might have a stock left over of. So that could be the cleaning materials, which is normal consumable stores, or it could also be packing material or stationery. So in this case, I have packing material left over. So what it means is I did not use everything that I bought this year. And the amount that I didn't use I will then be able to use it in the next financial year. So my expense for this year must only reflect the packing material that I used this year. And the unused packing material becomes an asset for the next financial year. And therefore we subtract it from packing material. I did not use 300 rands worth of packing material. I only ended up using 700. So what I used is what I show as my expense. This is the packing material that I used this year. This 300 rand becomes an asset for my next financial year, and the asset's name is Consumable Stores on Hand. The only thing for us that's left to do now is to total all our amounts. Remember to post them to the correct sides. So liabilities will go to the credit side, assets to the debit side, our expenses to the debit side, and our income to the credit side. So accumulated depreciation, these are both negative assets. It's the negative side of my asset. So if I add those two amounts together, it's 54,000. Those two together is 31,950. My debtors control is an asset, so the total for debtors control would now be 17,300. Bank is an asset as well, except if it's an overdraft. Always check in which side your opening balance is. In this case, my opening balance was on the debit side, so this is an asset. I've already recorded these liabilities. So prepaid expense, it's an asset because I've already paid somebody for the next year. So that would go to the debit side. Accrued expenses is a liability. I still owe them for the next financial year. Income received in advance is also a liability. I've already received money from somebody. I still owe them a service. Accrued income is an asset because somebody still owes me money. Consumable stores on hand was an asset as well. If we then move on to our nominal accounts, which reflects our income and expenses, salaries would now be 87,000 as an expense. Pension fund contribution and medical aid contribution, those are expenses as well. So if I add those amounts together, this is now 4450, and this would be 3,100. Bad debts is an expense as well. The new amount for bad debts would be 2,500. Discount allowed is also an expense. Rent income is an income, so it goes to the credit side. Insurance is an expense, so that would be 1,200. Bank charges is an expense as well, which is now 6,000 rand. Telephone is an expense as well. that would now be 21,000. Interest on fixed deposit is an income. Interest on overdraft is an expense, and depreciation is an expense as well. So that's 28,450. I then, remember this is actually one document, I then add everything on the debit side together, and that gives me a total of 108,600. And my final check then, everything on the credit side together. And my final check, if I did everything correctly, is that these two amounts must be the same. Thank you very much for listening. I hope it helped with just refreshing your memories on the adjustments. If you missed it at the start, these notes with a full explanation and a complete memo is available for download in the description box below.